us viewing. Did you speak with your? Good. Okay, so we have a few people viewing us. All right. We are 20 minutes behind schedule, but we're going to move forward. In 1 minute, we will open in prayer, and then we'll release these brothers with all their information. Welcome, everyone. Wow. Oh, that's nice. Let us pray. Good and gracious God, we do thank you for this day. We know that you've made it, and we are rejoicing and glad in your creation. Thank you, Lord, for what we're about to hear, what we're about to experience. Open up our eyes to see possibility. Open up our minds to imagine potential. Open up our hearts to expect the promise. And Lord, I ask that you would be with us and give us not just ears to hear, but give us feet to walk and actually do the things, enact the things, put into action the things that we've learned today. This we pray in Jesus' name, amen. All right, so I want to welcome all of you and those of you who are joining us virtually, want to welcome you. My name is Scott Williams. I'm the pastor, the senior pastor here at Memorial Presbyterian Church. And we have some really great information to share with you. First, I know you've heard of the dynamic duo, but we have the terrific trio. Raj Mirage, Dennis Key, and Farron Daniels. They will be sharing first, and then our very own Andrew Neal. We're going to learn about how we can leverage what's about to happen or what's happening that we've heard about Nassau County being the safest county, and we've heard that the Federal Reserve, that figure just went down by a half a point. So we're going to hear all about how we can convert that into home buying. All right, gentlemen, you each have a mic. Well, let's welcome them. Let's give them a hand clap.
Hi, good morning.
Good morning.
I appreciate the opportunity to be in the presence of beautiful people here, and it's a blessing for me. Thank you. Me and Mike.
Is your mic on, Raj?
So me and my team here, my guys, Dennis, Farron, and Brother Neil, we're here to share our knowledge with the folks that are here and who are looking at us, the benefits of being a homeowner opposed to renting, and how easy it can be to build wealth and pass it on to the next generation. Okay? So with that, I'm going to let the money man speak first, and when time for the real estate, I will come back in.
Thank you, Raj. Well, I'm not the money man, I'm the guy who gives information, because it's that information bring knowledge, and knowledge do what? Bring power. I want to thank Pastor Scott and the members of Memorial for inviting us out today. Our goal today is to provide information, to give you the information you need if you're in the market of getting homes, and if you're looking for that generational wealth and you're looking for stability in the community. As the pastor mentioned, Nassau County is rated one of the safest counties in the country. It's good family life, good schools, so we are here today to give you information, the tools. We're going to try to condense it because we don't want to take it too long. We want to give you enough information, and we'll give you the opportunity to reach out to us so we can provide more information to you. All right, so we have the team here, and this is Raj, and Raj and us will be going, and Dennis will be going back and forth, and we'll be asking each other questions and answering some of the information, giving you the information. So let me ask you a question by the raise of hands. What do you think is a good credit score to buy a house? If you're looking to purchase a home, what do you think is a good credit score? Anyone? 700, yes, yes, yes. Anyone else? There you go. Yeah. Good answers. All right, so we know that there are certain vehicles you could use to become financially independent and to secure future growth financially in your lives. One of it is through real estate. The other one is through the stock market. We are not stock market guys. We are real estate professionals. So this is the instrument that we use and we encourage people to use to gain financial freedom. Now, you mentioned 700, six scores. If I could tell you that, if I would tell you that there are programs that the government offers as a federally backed program, it's called the FHA program. So there are different kinds of FHA programs. There's the FHA First-Time Home Buyer Program. And with that program, it's incentivized to help you get into homes. So even with people with 580 credit scores could get into a home. Now, we recommend that you have a higher credit score because the lower the score, the higher interest rate you pay. But even with a 580 credit score, you could get into a home. Now, contrast that with renting. So Raj does renting also. Raj, what type of credit scores does a homeowner look for when they're looking to rent?
Upwards of 700. Upwards of 700.
Yeah.
Because they depend on their rent to meet their mortgage obligation. And they have to do the due diligence. It wouldn't be personal, but they have to look out for their own interest to be sure they rent to somebody that can meet the rent every month.
Yeah, so a regular homeowner, in order to secure their assets and to make sure that the person who they're looking to rent is creditworthy, they're looking for over 700 credit scores. And here we have a program where you could get in at 580. Again, you have to be responsible. Now, there are many other mortgage products. So this is an FHA program. There's also a conventional program. One of the good things about the FHA program, the minimum down payment is 3.5% down payment. 3.5%. The government is trying to incentivize people to get into home ownership. And this started almost 50 years ago. They understand the need for people to be in the community, because the stronger the community is, the better you get better schools, you get better protections and stuff like that. So there's a program just to incentivize people to get into home. So 3.5% down. If you do a conventional loan, typically it's 20% down. They have also programs 5% down. But the goal is to get you into a home. All right. So the Fed said, the pastor mentioned that the Federal Reserve 2 weeks ago cut interest rates by a half basis point. What does that mean? It means that for individuals who, in the last 4 or 5 years, since COVID, they were struggling to purchase a home because the interest rates were so high. The government has a tool which they use to decrease inflation, and that's by increasing interest rates. Now, because they use that tool, people who were looking to purchase a home, many people came to us and they said, hey, we want to buy a home. We're looking to buy a home, but their interest rates are so high. Now, with the program, with the government reducing the basis point, it makes it much more attractive for homeowners to get into a home. So, Raj, let's compare home ownership to rental. So if someone is looking to rent, what documentation they need to provide?
Depends on the homeowner. They want to look at your bank statement. They want to see the last 30 days pay stubs. They want to see the last 2 years W-2. They want to see your last rent receipts, among other things. They want to see your credit scores. Some of them want to see the report to be sure that you honor your financial obligations.
So the documents you mentioned was credit report. They're looking for bank statements. They're looking for pay stubs. And photo ID. They want to make sure you're the right person. If I tell you those are the same documents you will need in order to get a home. So at it's basically the same documentation that you have to give a landlord that you could use to get into a home. Think about it. Minimum 580 credit score and the same documentation, and you could get into a home. So don't lose that opportunity. I'm with Canyon Mortgage. I'm one of their business consultants. We go out there in the community to educate people in the community. At Canyon Mortgage, we'll be able to help you through the process from the starting where you first make contact with us to where you actually close. One of the interesting things we also do, are you guys familiar with pre-approval? Or pre-qualification? Pre-approval. So what a pre-approval is, when you go to the doctor, you do your annual physical. You go to the doctor and, they take blood work and stuff, and then you come back and the doctor say, hey, listen, your cholesterol is a little high, your blood pressure is this, and then they tell you, okay, this is the treatment plan we're going to give you in order to deal with whatever came up on your blood work and stuff. Similarly, in the financial world, when you're looking to purchase a home, the first starting point is getting a pre-approval. And the pre-approval is to check your credit worthiness. So you will meet with one of our professionals, they will look at your credit and your income. And then based on that, they will tell you, hey, this is how much you could afford based on your documentation. Because, the old people used to say, do not put your hat where your hand can be. We want to make sure that even if you qualify for a certain amount, you don't want to put yourself in financial situation where it becomes too onerous for you to live in a home. So what a pre-approval does, we gather the information and then we put it together and synthesize it and say, hey, listen, this is how much you qualify for. Even if you don't qualify at that time, we'll tell you, hey, your credit got a little banged up in the last few years. We have simulators in the office where you put in all the information and we could basically map a way out how you could get your credit scores up, how you could get your income going, how to get you on a plan so you could get a home. Now, in the real estate industry, the starting point, Raj, when you start working with someone, what's the first thing you ask for?
A pre-qualified document, because I do not want to waste their time or more time. At least we have a financial guidance of what we can look at. Without the document, we setting ourselves for disappointment. Because I can take you to look at houses without that document, but you may fall in love with the house. But without the document, I couldn't represent you. The other side don't want to hear what I got to say, because they may assume I'm working with a buyer that's not qualified to get mortgage. That's why that document is important.
So then I can also say that with that, once a person is disappointed, he can turn the mic down just a little bit. Once a person have laid their eyes on a home that he or she is not qualified for, but they love it, the benefit of this pre-qualification is it's going to be quite difficult now for them to really appreciate a home that they can afford after seeing a home and loving it that they can't, which is why Raj and I as realtors make sure that before we even begin the process of them viewing homes, that they actually have that pre-qualification, so that now every home that they view fall within their buying ability, their purchasing ability.
Right. So think about it also. Now, not everyone is W-2 employees. Some people are self-employed. So there are programs for people who are self-employed who are looking for homes. So being self-employed really doesn't disqualify you from owning a home. It's just a different documentation. You'll have to show your 1099s and you'll have to show some alternative documentation, but that really doesn't disqualify you. So speaking to the gentleman here, so someone with a pre-qualification, they come to you, you start looking for a home. Tell us what that process looked like. You take them out. What could they expect from the team?
I try to establish before we go out, is there a particular zip code they would like to live in? Is there a particular school district they prefer? Is there a particular style of house they prefer? Because different houses come in different square feet. So the smaller means square feet mean living space. So, of course, the more square feet the house is, will be a little bit more money than less square feet. And at least this way, I'll be able to show them exactly what they envision to be their home. There are some of us who will take you out and try to tell you what you should buy. That's not mine. You must decide what you should buy. And that's where I come in.
So they found a house, you took them out there, you showed them houses, and they found the house of their dreams. Do you encourage them to do a home inspection?
They must, if they want me to be their realtor. It is like buying a used vehicle without having a mechanic look at it. It serves the purpose to ensure the mechanics, which is the boiler, the electricity, the roof, the windows, the plumbing, is in function and order. And you need to know these things before you commit yourself. So if that inspector, go ahead, Dennis.
No, I was just going to say, along with that inspection, often people will say, I'm also a marriage and family therapist, so a person would say, I don't want to go to premarital counseling, I just want to get married, right? And in reference to real estate, you are spending hundreds of thousands of dollars on the average $450 and up for a decent 3-bedroom home. And so a home inspection probably is roughly averaging somewhere between, let's say, $600 and $800. But it will save you so much grief, because sometimes there may be something wrong with the foundation or things that are extremely costly that this particular engineer will bring to your attention. And now the person that's selling the home have to make some adjustments. Whereas if you don't get that engineer, all of a sudden you can be out of thousands of dollars after the closing. Because after the closing, baby, it's yours. So you want to make sure that if there are any major issues with that home, that you want to know ahead of time. And that's why it's so valuable for this inspector to actually. So if you're going to purchase a home, spend the extra dollar, just like Mr. Raj said, to actually get that home inspection done.
I would also like to add that me being a real estate agent, I get paid when and only if you purchase a home. So therefore me, I would help in the sense I would reimburse you that cost the day of the closing. Mr. Neal would verify that is very uncommon, that what we are offering. You know, it's about relationships that we build. Because today you're a homeowner, 10 years from now you're a seller. So it's a relationship we build with everybody.
So we at Canyon Mortgage, what we do is that, so you found the house, you did the inspection, and you're ready to go. Again, we have already pre-qualified you. So we know what your situation is, we know what your buying power is, we know what your financial strength is. Now, when you come to us, the process typically takes between 30 to 45 days. If you provide us with all the necessary documents, that's the key. You gotta get us the documents. Most of the time, we have to be chasing people for documents. You know, it's like, oh, I'm getting paid on Friday, so wait till Friday. Get us the documents beforehand. If you get us the documents beforehand, we are able to process your loan. And you'll be working with one of our team members. They'll be in contact with you. They will tell you how to send it, whether email, faxing, or whatever. Or they'll come and collect it. We will work with you in getting that process done. So within 30 to 45 days. Now, during that process, one of the things that needs to get done is an appraisal. So an appraisal, so there are different people involved in the home buying process. There's the buyer, the seller, and the bank.
And their attorney.
And the attorney. There are different people involved. So what is an appraisal? Unlike an inspection, a home inspector, the inspector goes in and checks the property to make sure the mechanicals are working good, the plumbing. On the other side, the appraiser, he goes in there to determine the value of the home, to make sure that what you're buying is relevant to what you're paying for the property. So they go in and they are independent. They don't work for the banks. They don't work for the mortgage companies. These are independent individuals that have been contracted to go out there and determine the value of your home. So you'll get the appraisal done, and once the appraisal comes back and it matches or closely matches the purchase price, the bank will allow us to move forward with the sale. At Canyon Mortgage, if you close with us, we do reimburse you for your appraisal fee. So that's one of the services we provide also. If you close with us, we give you back your.
Folks are asking, folks online are asking that you would hold the mic closer to your mouth.
All right, no problem. So, yeah, so at Canyon Mortgage, we will reimburse you once you close with us. So, now, we're ready to close, and it's a couple of days before the closing. There's also, the realtors will contact the lawyers and everyone, and we'll set a date to close. You'll get a clear to close from us to close, and then Raj will be, and Dennis will then make arrangements for you to do the final walkthrough of the property. So give us an idea what that looks like.
Well, to be sure the house is in the condition that when you first saw it and decided to purchase it. Because during the course of 45 to 60 days, some people make errors and destroy what you are purchasing. So that's where the walkthrough is. You come in, you turn on the stove, be sure the gas is on, you run the water, you flush the toilet, you look under the sink, you check the window, you roll up the window, you do certain things to ensure the house is just in the way you first when you saw it. And then you call your attorney and say, Mr. Neal, we did the walkthrough and everything is fine. If anything is wrong, you should tell your attorney, I discover this is different. And your attorney would address it with the other side. Not you, not me, he will.
One of the major differences as well, when you first going through the process of purchasing the home, quite normally is filled with furniture, right? When you do that final walkthrough, the idea is for it to be totally vacant. So possibly there's things that you didn't notice before due to furniture hiding it or covering it up, that now, with it being totally vacant, you can see things that you didn't see previously. So that's another benefit majorly of walking through maybe 24 to 48 hours prior.
Very well. So, again, so we do the final walkthrough and you close, and congratulations, you are the homeowner. Now, one of the things about being real estate professionals, you never get us out of your life. You know, we're always there, because I could tell you that people who, even when I started renting apartments for people or providing financial services for people, if you do a good job, people will always come back to you. And they have questions. As a first-time home buyer, you have no idea where things are and how things work. We are here to provide the guidance for you so that we could walk you through the process. So you close, you're now the proud homeowners, your realtor gave you the key and you're happy and you're ready to put up all the drapes and put in the whatever. We will be here to help you. Now,
one of the things you should not do until the hour after you close is to run to the store and buy a new refrigerator and a new car. You do not accumulate debt until after you close. It could hurt you. So don't do any major purchases until after you close, okay?
So let me tell you this. Interestingly enough, I've had people do this when they're purchasing home. They already envision moving in the home, so they go to Raymond Flanagan and they go to all these other places and they start ordering stuff and saying, I want it delivered at a certain date. When you're being pre-qualified for a mortgage, those new purchases were not factored into your ratios. And you know, when you pull a credit score, it impacts your, when you pull credit, when you go to one of these stores, they pull your credit and it impacts your scores. Therefore, it makes it, prior to closing, the bank will do a final check to verify that things remain the same. And I had one guy, he was looking to purchase a home, I was working with him, and he went into a Harley Davidson dealership because he wanted to gift himself a Harley Davidson after he purchased. He wasn't looking to buy it then, but he was looking to gift himself because he was so proud of himself. We had to wait 60 days, close 60 days later, because he had to write the credit bureau and say, listen, I was just doing an inquiry. They did a hard pull on his credit score, so we had to wait 60 days for him to get in. So we're cautioning people, when you're going through the process of home buying, restrain yourself from doing any kind of credit inquiries or ordering some stuff on your credit. Any other?
Dennis?
Yeah, just one thing. I just want to, again, thank Pastor Scott and the leadership here for this opportunity. When you think in terms of someone that's renting today, in comparison to home ownership, there were a time when probably most of us in here was young, and there was a major difference financially in terms of someone renting as opposed to a mortgage. I was just searching for someone in an apartment yesterday, and they started from, they said, okay, this is my max, $2,500. I would like a 2-bedroom. And probably not to your surprise, there was not a 2-bedroom apartment available for $2,500. So the person said, well, okay, look for a 1-bedroom. It was difficult to find a 1-bedroom apartment for $2,500, which is why I think it's so great of Pastor Scott in care and concern of the members here that he is leading to bring and allow us to come and share with you home ownership, because now financially, if you're renting, there really is not too much of any benefit to you as opposed to trying to see if it's possible for you to join the club of home ownership, because there's a lot of benefits to that in terms of taxes and et cetera that often is not advantageous towards a renter. Okay, so kind of keep that in mind.
Also, that's how I'm leaving legacy and generational wealth for my children. They have been left in a better financial position than my parents left me. It comes with a sacrifice, guys. There's a lot of things you can't do for your kids, but you can leave them with a house over their head. You're leaving them in good hands. All right? So that's how you have to look at it. Legacy and generational wealth. I purchased my first home when I was 29 years old. I gave it to my wife in the divorce. 2003, I got married again. I purchased another home. To this day, I have built almost $700,000 in equity in that home. So when I retire, I have a cushion, or I have something to leave my children. So that's how you have to look at it. Not today, but 5 years from now, 10 years from now. That's when it comes in. You don't need to go and buy a brand new Mercedes-Benz, guys. Trust me.
All right, so we're going to have Attorney Neal now come. But listen, I'll be giving out my cards, and then we'll be taking questions. So after Attorney Neal speaks, we encourage you to ask questions, and we can answer some of these things for you.
Hi, my name is Andrew Neal. I'm a real estate attorney. I know Mr. Maharaj and Mr. Farron and Dennis through practice. I worked for a firm that represented commercial banks such as Citibank, Dime Savings, GMAC, Atlantic Federal Savings Bank, Republic, Manhattan Savings Banks as well. I would say that buying a home, as they just got through saying, is the best investment that you can make. As a matter of fact, that's the greatest asset that most people ever have, is a home. And there are very few things that put $500,000 into the community, like buying real property. And I believe the home buying market comprises a little bit over 11% of the GDP of the United States, which is like one of the highest leading indicators. In this seminar, I would say they're absolutely correct. I would say also, as far as like getting a pre-approval, the first thing you should do is maybe see somebody that does credit repair. And what they can do is they can repair any blemishes on your credit, and they can also, raise your credit score. That will definitely help you with your pre-approval for financing. My next thing that I'd say in buying a home is to consult a real estate agent. And also, there are properties called REOs, which stands for real estate owned. And those are properties that have gone to foreclosure that the bank buys back at the auction. And they sell those at a discount because they don't represent the condition of the property. Ben Carson, the head of HUD, did not know what an REO was. He thought they were talking about Oreos. When you do find a house, consult an attorney, okay? Call your attorney and have a contract generated. Generally, with transactions, it's either going to be subject to financing or all cash. Most first-time home buyers or just home buyers, period, will have a contract that's subject to financing. What that means is that after you put your down payment down, if you don't qualify for financing, you have the right to get your down payment back because you did not get financing from the bank. With all cash transactions, of course, they're not subject to financing, and that's for investors or people that are very confident in buying, that know that they have the money to buy the house. When you get into the contract, as far as the physical conditions of the property, the only thing that will be represented, if it is represented or generally is represented, is the heating, plumbing, electrical, mechanical systems, and major appliances being in working order, and the roof being free of leaks, okay? We also touched on getting an inspection. When you get an inspection, very important to get, I would say, an engineer's inspection. That is the best inspection that you can get. First, it's going to be an engineer, then an architect. Third, a contractor. Last, a home inspection. And a home inspector is someone that, basically they're not as versed with what the cost will be and the technicalities. But as I said, the engineer is what you really want, an engineer's inspection, because once you take that money, the bank doesn't care that the water pressure is no good on the second floor and you can't take a shower. They don't care that the basement floods with water, every time it rains. But they're going to want their money. The next thing is to consider is title insurance. A lot of people miss title insurance. Title insurance is the type of insurance that you get whenever you buy property. Assures the property is free and clear of all liens and encumbrances. There are two parts to it. You have what's called fee ownership, which covers you as the homeowner, and then mortgage insurance, and there are different types of mortgage insurance, but this type of mortgage insurance assures the lender that, one, their lien against the house is first in line, so they have the next interest after the homeowner, and should title be impaired in any way, all you have to do is send a certified letter to the title company and they'll defend you free of charge. And that's for any blemishes on title prior to you purchasing the property. And there's also something called fair market value insurance or future market value insurance, which says that not will you only be indemnified up to the value of the purchase price of the house, but you'll be indemnified against any loss at the time of discovering the blemish or impairment in title. And I once had a situation in Brooklyn where a woman bought a brownstone. She did work to it. It increased by like maybe $800,000. And the sellers had bought the property from an estate, and they missed serving one of the members of the estate. Once again, sent in, but in this situation, it was good that we got the fair market value, because at the time she bought the property, it may have been, I think, like maybe $750,000, but at the time, just like less than a year later, the house was worth over $1 million. So she was indemnified to that future market value. I'll jump to the financing again. When you apply for your mortgage, what you're looking for after the pre-approval is what's called a commitment. A A commitment is an enforceable promise by the bank to lend you the money so that you know that you can go through with the transaction. When it comes to financing, I would generally say that the best financing you're going to get is from a savings bank, a savings bank, a credit union, then a commercial bank, and a mortgage bank, and last, a mortgage broker. A mortgage broker is someone who's maybe an individual or works for a firm, and what they do is they deal with a lot of different banks, and they try to find you the best bank there is or the best rates there are. And there are very good mortgage brokers that can find you, very good mortgages. When it comes to financing, a lot of people are caught up on interest rates. However, what you really have to be concerned with, or what you really need to know about, is what's called an APR, and that stands for annual percentage rate. How that works is if you said to me, hey, Andrew, could I borrow $10? And I said, sure, but I'm going to charge you $2 to borrow the $10, and I want 10% on my money. $1 is 10% of $10. But when you consider that I charged you $2 to borrow the $10, that $1 is actually 12.5%. Now, that shows you how much the bank is charging, the APR. You could have a loan at 5.25% and another loan at 5.5%, and the loan at 5.5% is better because the APR is lower. When you apply for financing within 48 hours of the application, the bank has to send you a statement which is called a truth in lending statement, which shows how much the bank is charging you to borrow that money. Let's see what else. And also, you should, something that you can do if you're interested right now in looking for a house and financing and stuff like that, buy today the Sunday New York Times. You'll see all the different banks that list their interest rates, definitely list what the APRs are and things like that. The types of mortgages that you can get a fixed rate mortgage, which means your interest rate will be fixed for the life of the loan. You can get an adjustable rate mortgage. You have some what are called, well, non-conforming loans. I'll explain those. Those are loans where you have something called a negative amortization or a balloon payment, things like that. Negative amortization are gimmicks that came out in the 80s, and they're frequent then because what it was is that your interest rate may change, but your payment stays the same. You have a constant payment for the duration of the loan. Now, if your interest rate goes higher, then you can end up owing a lot of money as a balloon payment when you want to sell your property or terminate the loan or to refinance it. So the government caps the total amount that they can charge you over that at 10%, okay? But generally you don't want that. We're not in those conditions right now. Another thing that I would say, when the interest rates are like just before they lowered the interest rates, when interest rates were like 7 or 8%, if you took out a mortgage for $400,000, you would pay nearly 3 times as much over the life of the loan. If you got a 30-year fixed mortgage, you'd probably pay about $1.1 million. And when it comes to how the banks make their money, they have what's called upfront money and back-end money. The upfront money are the points and all those things that create the APR. The back-end money is for every 1/8 of a point above prime that the bank can charge you. It's like exponentially, it's like $12,000 over the life, $12,000 to $17,000 over the life of the mortgage, okay? Also, when it comes to financing, I would advise you to always take the longer term. People say, oh no, I want a 15-year mortgage. Take the 30-year mortgage. The monthly payments will be lower, but you can always pay it on a 15-year schedule. It'll save you a lot of money over the life of the loan. I believe Mr. Farron and Raj also mentioned something called FHA. What that is, these are loans from they're federally insured, and basically they're insured because the government says to lenders, if you make this mortgage to someone that is not, that is not historically qualified to receive this loan, and they default, we will reimburse you for your loss. And it used to be that whenever you borrowed, the bank would only finance 80% of the loan-to-value ratio. So if you're buying a house at $100,000, and you're not going to find a house at $100,000 nowadays, you would put 10% down, the bank would give you 80%, $80,000, then you had to come up with another 10%, $10,000, plus, remember the bank is charging you fees, maybe $8,000, also your title charges, maybe another $6,000. Altogether, to buy a $100,000 house, you needed like $30-something thousand. A lot of people don't have that kind of money, and you're not going to find a house for $100,000 in this market. So what people were doing in the late 80s when I got into real estate was, between the buyer and the seller, they knew the contract sales price was $100,000, or the purchase price was $100,000, but they would do a contract of $140,000. The bank would give a mortgage of $112,000, and people paid everything, walked away with money, went on trips, fixed up their house, and all of that. The banks got hip to it, and they said, we don't want to finance 100% or more of the purchase price of the house. So what we're going to do is we're going to raise it above that 80% threshold, and they charge you something called mortgage insurance, which is the difference between 80% and the actual amount that you finance. Now, at one time, it was all the way up to 106%. So if you're buying a house for $100,000, the bank would raise the price to $106,000. The seller would give you a concession, a seller's concession of 6%. And it was thought that that extra money that you get by having the loan increased will help you with, money at the table. It does. However, it actually costs you more money in the long run. And the reason is because everything in real estate works on percentages. So if the interest rate increases, your fees increase correspondingly. Okay, so I'd say what you would really want to do is probably not take a concession if you can, because you get lower interest rates and things like that. Let's see, what else? The deed, and this I guess is probably, I'm winding up now. When you take title, there are three main ways that you can take title. If me and Raj are buying a house that we intend to buy, fix up, and sell, we would take title as tenants in common, meaning that if anything were to happen to me, my interest would go to my estate, and if anything happened to Raj, his interest would go to his estate. When married people take title, they take title as tenants by the entirety. If something happens to one spouse, it automatically goes to the survivor. And the good thing about it is that that money goes to the survivor outside the laws of intestacy. So there are no gains tax, there are no taxes on that transfer. If me and Raj are real cool and we're like, look, man, if something happens to me, I want my interest to go to you, you would take title as joint tenants with the rights of survivorship. And as I said, when you're buying a house, it's probably the greatest thing you can do, because real estate is the benchmark of all property. It gives all other properties its value. And I see that I'm getting the hook, so I will just let you know that it's the best investment you can make, because as I said, it continues to gain. It gives money its value. If you had a house for $100,000 or $100,000 in the bank, the house would appreciate much more over a year than the money in the bank.
No, I just want to thank everybody, and especially Pastor Scott, for this opportunity.
Well, thank all of you. We had a lot of information, a whole lot of information, some numbers, and if you're like me, I don't quite understand all the numbers, but I know that these gentlemen have tons of information. We have folks that are joining us virtually, and some of you may have some questions, but I want to start this off by asking Brother Andrew, why is owning a home, you said, is the best investment? Why is that?
Because, as I said, real estate is the benchmark of all property. It gives all property its value. Real estate is one asset that rarely goes down in value. And even if it does, it can come back up in value. I'm sure you know, like you've seen Brooklyn. I remember the time when brownstones were going for $30,000, less than $100,000, and now they're worth more than $1 million, multiple millions of dollars. And as I said, it's actually one of the leading indicators for the government are home purchases, because nothing else puts $500,000 into the economy like real estate. It's very unique. And
So it's always, it is often appreciating.
Yes.
All right, so we appreciate the fact that it's appreciating. Brother Farron, I heard about APR, fixed rate, and adjustable rate. Which one is better for me?
It all depends.
Yes.
It's very specific to your needs. So it's not a cookie cutter. Based on what your circumstances are, we can now tailor the type of product for you that's going to be advantageous to you. Our goal is to give you the most advantageous product for you. We're going to show you the landscape. These are your choices, these are the options, and we'll show you which one makes sense for you.
So it's not one size fits all?
Absolutely.
Oh my goodness. All right, well, we have some folks, you want to say something?
I just want to say, don't be afraid of an adjustable rate mortgage. A lot of times you have like a period where it's fixed, maybe 5 years. And when it does change, they have caps on how much it can change on that first change date, that it cannot change more than 1%. And after 5 years, if the interest rates go down with an adjustable rate mortgage, your interest rate will go down. If they go up, as I said, they have caps on how much it will change over in the first change period, as well as a cap over the life of the loan, okay? But don't be afraid of adjustable rate mortgages. Also, consider your taxes. Until Donald Trump changed the tax code, we were able to write off our real property taxes against our income, as well as the interest that you pay on the mortgage. So that's why it's also such a good investment.
Great.
Yeah, I was just
Dennis.
going to say that another reason why these various rates all depends on your situation is because it's rare today, unlike, again, when we was kids growing up and people will hold on to a house for 30 years. Now, you may get into a house with an adjustable rate, which most likely will lower your mortgage because of the low interest rates. But before it actually increases or balloons, you have an opportunity to actually refinance, which many people do, just like those that was in 5% mortgages, and when the interest rate dropped down to 2% and 2.5 and so on and so forth, that was unbelievable. A lot of people refinanced and then got the lower. So that happens somewhere, certainly within that 30-year range. So again, it's not one size fit all.
I don't know if you all know, there's a guy named Phil Donahue who just passed away. He was a talk show host, and he ran around the audience. So I'm about to run around because I see some questions in our group. Okay, so here's one here.
So I just want to ask Mr. Neal something. You were describing a transaction with the seller's concession.
Yes.
Were you saying there was a downside to getting a seller's concession, or?
It's just that if you consider like two things. One, most people can pay a monthly fee. So if you qualify, you can make a $3,000 payment, that's fine. But if you have to come out of your pocket with a large amount of money at the closing and, and then make that payment, it's difficult. So you have to balance it with the monthly payment that you're set up to make, as opposed to having a big expenditure and then jumping right back into that.
Who else has a question? Oh,
You had given an acronym for foreclosures. What was that? Was it RDO?
REO, real estate owned. REO, not Oreos, REO.
Thank you.
And those are again, please?
Those are properties that have gone to foreclosure that the bank buys back at the auction because nobody outbids what's called their upset price or the amount of the judgment. So they buy it back. And they, by federal law, banks are not allowed to broker houses, so they have to hire a real estate broker in order to sell those houses. But they don't make representations as to the condition of the house. So once again, very important to get an engineer's inspection, and they generally sell those houses at a discount.
Wonderful.
How do you get to know the foreclosure property that are valuable?
Well, there's several ways. One, like for me, I do a lot of foreclosure defense, and brokers will say, I have a client who's in foreclosure, can you do a motion to stop the foreclosure sale? And I'll do a motion to stop the foreclosure sale. I also used to do foreclosures for a firm that represented Columbia Federal Savings Bank as in-house counsel, Ricca and Donnelly. And I learned about foreclosures there. So I know what I'm looking for in order to, people make mistakes and the banks make mistakes. A lot of these big firms are, just because they're big doesn't mean that they're accurate. Some of the better firms are mid-sized to smaller firms because they really pay attention to detail. So you have to make sure that the bank didn't make a mistake in the foreclosure process, because if they did, you can actually get the judgment vacated or get the foreclosure wiped off. Right now, the legislature has provided something called FAPA, which stands for Foreclosure Abuse Practices Acts or Procedure Acts. And that's something that's really just getting implemented. And what it does is, like, at one time, the bank was able to toll the statute of limitations. The statute of limitations says that a proceeding has to take place, within so much time after the cause of action arises. Otherwise, it's stale. So there are a lot of foreclosures out there for properties where the actions were commenced in 2005, 2007, 2010, and the statute of limitations on breach of contract is 6 years. Now, there's a discrepancy with what's going on, because if you remember, like for me, growing up in the 60s and 70s, we had Schoolhouse Rock, and they told about, I'm a bill, I'm sitting on Capitol Hill, and he explains with the legislature that has to go to the House, then the Senate, then the president signs it. A lot of people are not cognizant of how government functions. You have 3 branches of government. You have the executive branch, which carries out the law, the legislative branch, which makes the law, and the judicial branch, which determines if the law is constitutional. Now, with FAPA and these things, they have said that the legislature intended for these new rules to be retroactive, to apply to what's already gone on. The courts are saying no, because that's unconstitutional. You have to go with what went on at that time. But even with the laws that were in place, as a foreclosure attorney or a foreclosure defense attorney, I can look in to see if they did it correctly.
I'm not sure if that was the question. Is that I think what she was asking you was really simple. How do you guys know, how would we connect? Let me ask the question. How would we connect with the foreclosure listings? I mean, how do we, your attorneys, your real estate professionals, you that know the MLS and all that, how do we, as normal, everyday folks, one of y'all, since y'all haven't spoken, well, maybe you.
Okay, so as I said, a lot of times people will be in foreclosure, they'll come to the broker, they'll say, listen, my house is in foreclosure, what can I do? The brokers will call me. Another way is that when your house is in foreclosure, you have to, for the notice of sale, advertise in the paper once a week for 4 consecutive weeks. Now, when you see those foreclosure listings, you can approach the people and say, look, I notice your property's in foreclosure. I have a letter of credit, or I have X amount of dollars in the bank, I can show that I can satisfy that, and then you would contact me, and I'd work out a deal with the bank where we would buy the foreclosed property, okay? But after it's foreclosed, then you would have to deal with the bank itself and get a real estate-owned property, an REO.
So the notice of sale is published. So the notice of sale is published. So my recommendation is you work with a realtor. Tell the reader what you're looking for, REOs or whatever. Also on the MLS, these properties are also listed through brokers. So Raj and Dennis, they as realtors, they have access to that list. So then they could search for these properties for you.
So I guess what we're trying to find out, which well, let me just say, I guess what we as just average everyday people cannot technically find out about these foreclosures. Is that what you're saying?
So
Unless we go and scour the papers.
you could search. You could search. It's easier for you to find these properties if you
Through a real estate professional. Okay, great.
If you know what you're looking for, you can find it. But we are people who are in the business, so that's why we have an expertise in it. Yeah.
Okay.
I had a question, and I guess this is more for the realtors. Vice President Harris is proposing this tax credit for down payments on for first-time home buyers and what have you. How would that affect a real estate market like here? I live in Virginia, so when I bought my house 30-plus years ago, it was $114,000. It's now probably about $385,000. I don't think I could sell my house today and find something to move into. You know, it's really hard. So I can't imagine what people living in New York are dealing with the real estate market. It's definitely an investor's market. They're swapping up all the properties.
In my humble opinion, to me, that $25,000, if I know the government is giving you $25,000 to buy a house, I'm going to increase my price by $25,000.
You're going to do what?
Increase my price.
Increase the
Let me answer
price.
your question. Let me answer your question. So until the legislation is, we don't know the outcome of the elections. So let's make that assumption. So when the legislation is passed, so these are proposals that they're making. It has to go through the whole process, and we finally see what that looks like. Because right now is a policy proposal. When if it finally comes to fruition, we could then now work on how we could tailor it for Virginia or New York and stuff. So again, we are listening to proposals and we're looking and see who could provide opportunities for everyone. But until it becomes legislation, it's very difficult to. But as realtors, we'll be prepared to assist you any way possible. Again, it's a hypothetical, so it's very difficult to give you a good answer on that.
Okay, so I have a question. We have children
Yes.
and grandchildren that are opting to live in Brooklyn, Manhattan, or in the boroughs. What is the benefit that we can present to them so that they would consider the alternative of living in Nassau County?
Quality of life.
Okay.
That's the most important thing.
So quality of life, does that trump, no, I'm not going to use that word. The money, the outlay, the monthly payment. Somebody said, I think it was you, Brother Dennis, you talked about folks paying X amount of dollars for an apartment in the boroughs versus here paying something similar to that. So can we talk about that a little bit?
Yeah. I think the idea is, like here in Nassau, one of the pushbacks often for a lot of people that desire to live in Nassau is the taxes.
Right.
So what we normally, along with the quality of life, what that looks like for them is also the taxes is supposed to offset, as we know, the quality of education, right, in terms of the schooling. And opposed to sending your child to a private school, then here, as far as you paying those taxes, you're supposed to be included in those taxes a more quality education at the public school, right? As opposed to living in Brooklyn or Queens or one of the other boroughs and happen to kind of sort that out for yourself, which is a whole additional expense. Now, some of them would say, I'm not ready to start a family yet. So that comes with a whole nother discussion then, which, depending upon areas in Brooklyn, is just as expensive now as areas in Nassau, lacking the quality of life. So there were a time, again, where you could live in the other boroughs and say you're paying a lower mortgage. Not today, necessarily. So I think we will go back to the cookie cutter, where each situation is a little unique based upon that particular family or purchaser. So not because you're going to live in the other boroughs necessarily are your mortgage going to be less, right? So it all depends on what you're looking for in the cost.
Great.
Also, as I said before the tax code was changed, you could write off your taxes and interest. Now it's limited at $10,000. It hurts people in Nassau County. But if you made $100,000 a year and the taxes on your house were $15,000, the federal government could only tax you on $85,000. So it actually helps you.
And Pastor, if I can say something in response to that 25,000, hopefully, tax credit that our sister was referencing. I believe, because it's not obviously law as of yet, but I think it would be probably more so than money in the pocket, more so a tax advantage at the end of the year, right? Where now you can, like what the attorney said, that makes sense to me logically and cognitively, that at the end of the year, if you're a first-time homeowner, then you would get a tax credit of $25,000. And now you get more money back in your pocket.
So I think just an interesting thing for people to think about as they're asking candidates for like a tax credit is the idea of a price freeze on home prices for the benefit of home buyers, such that if a $25,000 upfront cash advance is made available to first-time buyers, that sellers and agents cannot inflate prices by magically 1 month it's one number and then it's the same number plus $25K. But that's not, you all aren't writing policy, you're just reacting to it as members of the market. So my question though is, I'm 24 years old. I was 8 years old when the housing bubble exploded, ruined a lot of lives. I also noticed that in the ensuing years that there's been a large trend of young people being, I'll just say, marketed to, that our most stable asset is still in homeownership and real estate. But I am a little worried that many young people, especially young high earners, are being taken advantage of in this current environment, where if you do have either high cash flow or just are able to get access to good lending, that I know people my age who are buying homes for $300,000, $400,000 in, maybe not in New York, but in similarly medium-sized city markets, greater areas of metropolitan areas, with the idea being that one day they might be able to turn it into rental properties. Not hypothetically, what do you think about that as a strategy for investment for people my age who are looking to, return in a 10-year, 20-year, 30-year timescale? But specifically, what sorts of financial vehicles should people that are looking to invest while the market is still favorable to investors, what vehicles should we be avoiding as, you know, the children of the people who lived through the housing bubble?
Couple of things. That was a statement and a question. It's a lot in that statement. I would say the best thing to do is to have home ownership. As I said, your home will appreciate in value. As far as being a landlord, it's very tricky in New York. I also do evictions as well. Right now, on average in 5 boroughs, it takes over a year to get a tenant out of your house. It's better in Nassau and Suffolk County, but not much. I mean, the legislature, once again, whereas if you wanted to evict somebody just to get possession, primarily to get possession back, you had to give them 30 days notice and then you could bring the action. Now it's graduated. If they've been in the property for less than a year, you have to give the 30 days notice. If they've been in the property for more than 1 year, but less than 2 years, you have to give 60 days notice. If they've been in your property for more than 2 years without a lease, you have to give them 90 days notice. So that means a quarter of a year before you can even put the matter on the court's calendar. And then it's going to take the court maybe a month or, well, in Nassau County it's quicker, but in Queens, my office is in Jamaica, Queens, by the courts. It's going to take maybe a month to get your index number and a court date. In Brooklyn, last year this time, I served the tenant who had only been in for a month when the relationship went sour. 30 days notice to be out. I served it in August for them to be out by the end of September. October, I put it into the court system. I didn't get an index number until December 23rd. When I finally got the first court date, it was April 22nd. We actually settled last month in August, and the tenant doesn't have to move out until February.
So what instruments, I think the question, what was your question?
Yeah, what kind of, so like as a buyer, or if I'm looking
A young buyer.
I said, first, primarily it's for home ownership, to have a place of your own that is a good asset. If you are going to be a landlord, you have to, make sure that your clients are vetted, that your tenants are vetted, and that they have, assets to pay an income to pay the rent. But even that is not a guarantee, because I had clients coming to me to evict attorneys from their properties, because depending on what type of law you practice, during the Great Recession, a lot of different industries were impacted. So if and one person that a client came to me to evict was an immigration attorney, because immigration was down during the Great Recession. And this was a property in Manhattan where the monthly rent was $5,000, and the attorney could not afford to, pay, I guess, the overhead of rent plus an additional $5,000 when people were not coming into the country and, or not, there was a worldwide recession. So, as I said, primarily, I would say a house is always good for building your wealth. And if you live there, that's going to be good for you.
try to get cash, not credit, not
I'm sorry.
Try to pay to own the home.
Yes.
Do not look to
Yes, and when I was
lean
growing
on
up,
it.
everybody wanted to pay off their mortgage. When I got into real estate and I saw people walking away from the table in the 80s with like $400,000, $300,000, I said, I want to be like that. But the brokers, not to give all bad brokers a bad name, we live in a capitalist system. Everything that we do is about the acquisition and management of property. When you get up tomorrow morning, you're going to go to work, you're trying to get property, personal property, the money to cover your bills and things like that, and that's what it's all about. So there's no way that we're going to put caps on how much money can be earned, but they have safeguards in place so that we don't get into a situation where you have the more a house sells for, the more a real estate broker is paid as a commission. The more the house sells for, the more the bank can charge. And if they're doing FHA mortgages, which are guaranteed by the government, they had what are called no income, no assets verification loans. So they just approved everybody. As long as you had the credit score, you're in. And they gave people mortgages. The thing about it is that these people really didn't have the assets for that. And I was telling you about how banks make money. As I said, you take out a mortgage for $400,000 with an interest rate of like 8%. Over the life of the loan, you're going to pay about $1.1 million. The bank that gives that mortgage to you, they borrow from the Federal Reserve at a much lower interest rate. That interest rate may be like 3% when yours is 7 or 8%. They sell the mortgage to someone else for $600,000. So they make $200,000 just like that. The person that buys it isn't worried because they get what's called portfolio income. Think about it. They're going to still collect another $500,000 over the life of the loan. So there's money in it. And if there's fraud on a transaction or the mortgagor defaults within the first year, then the person or the entity that sold the mortgage has to buy it back. What happened with the Great Recession is when these people were defaulting, these banks no longer had the money to buy it back, and that's what caused the financial collapse.
So I think there's another question there.
What'd you say? Yeah, I think you wanted to say something, and then we have to close.
Yes. I was just going to say there are different options. I know there is no greater asset than property. You may not own a home. They have something that they call co-ops. They have condos, which is a little less expensive. However, when you sit down with to get your pre-qualification, that will pretty much educate that particular realtor on which route that is most suitable for you. So regardless of what you pursue, property it cannot be beat in terms of appreciation over time, and getting that pre-qualification is going to tell you a lot.
One last question, then I'm going to give each of you 1 minute to close, okay?
All right. Hi, good afternoon. I hope I'm wording my question right, but I guess I have two questions. How important is it to have a lawyer involved, whether you're buying or selling a house? And what is the difference between buying property like a home versus a condo?
Okay. So the first thing I'm going to tell you is when you're doing any kind of transaction, you look for an expert in that field. So when you're purchasing a home, I want you to look for a real estate attorney who specializes in real estate. They do it day and night, night and day. This is all they do. That's the attorney you're looking for. There are many types of attorneys. It could be a cousin's best friend who is an immigration attorney who would do real estate at the side, or it could be someone doing some type of intellectual property, but they saw an opportunity to do real estate. Get a real estate attorney. They are the ones who they do it day and night. You want a professional. Mr. Neal happens to be doing real estate. Yes, buying or selling. Buying or selling. Okay. Co-ops and condominiums. So you asked the question about co-ops and condominiums, or yeah.
This one doesn't work. Very quickly, co-ops and condominiums. A co-op is a corporation, and it's actually a stock transfer. And let me tell you what the difference between a co-op and a condo is. With a condo, there's no underlying mortgage. You buy a unit in a property, and that is your real property. You can change the configuration. You pay a percentage of the tax on the whole building based upon your percentage of ownership in that building. With a condominium, there's an underlying mortgage. So when you make your maintenance fees, Part of that goes to pay the underlying mortgage as well as the upkeep of the premises, but you'll also have a mortgage on your shares of stock. And what you get, as I said, is when you buy a condominium, a co-op, is you get a lease and a stock certificate. And the stock certificate shows that you have ownership in the corporation, and you have a lease that says that you can rent this apartment, you know, as a right by virtue of holding stock in that corporation. But with a condo, you have what's called a board of approval, and you cannot do anything unless you consult with the board and make sure that it's approved by them. If you don't consult with them, they can hit you with fines and penalties and things like that. Almost like not quite like an HOA, but an HOA is more like a condo. A condo is real property. A co-op is a stock transaction, okay?
All right, so we're going to give you each a minute. We're going to start with Andrew, 1 minute, and then, no, we can't.
I yield to the gentleman.
Switch space.
But in New York, I will, but in New York, you have to use an attorney. It's like, this is how all parties at the table are represented by attorneys. The bank has an attorney, the buyer has an attorney, the seller has an attorney, and the title company is generally backed by attorneys because, you know, they're also dealing with insurance as far as the property, as well as legalities to make sure that, you know, that everything goes according to what's required in order to insure the property.
All right, so this is part of my 1 minute. My name is Ferron Daniel. So I do business outreach for Canyon Mortgage. What we do is we work with buyers, whether it's first-time home buyers, investors, people who are self-employed. We work with everyone to show them the best products out there for them. So whatever you need, whatever your needs are, is tailor-made for you. You come into us, sit with us, tell us your circumstance, and we will tailor a program for you. I'll be giving out my cards. If you need to talk to me or talk to anyone in the office, give us a call, and we'll be more than happy to discuss your financial needs with you.
Hi guys, as a realtor, I want to lead you in happiness. I don't want to put you in a house that 6 months you're struggling to pay. I want you to purchase something that you could live happily ever after, you and your family. You overextend yourself financially, it's going to bring unhappiness in your home, and nobody's going to benefit like that. I would buy the house that I could afford, not the house the real estate agent tells you to purchase. Okay? You may buy a house where the kitchen need upgraded over years, the bathroom. Take your time and fix it, because every dollar you put into that house, you only increase in the value. It's called equity. It took me 12 years to put a kitchen in my home, and you know what? The food didn't taste a bit different. Okay?
Yes. Again, thank you for this opportunity, especially for your time after a service. I know how that can be. And all I would say, a lot of information was given out today. Cars are provided to you. Whatever your interest is, one of us can certainly, I'm sure, provide you and answer your requests and your need. So anyone that you know that wasn't here today, please pass on this information. And again, thank you for your time.
Yeah, you get a one-on-one with any one of us at any time.
Now,
Thank you.
yeah. We want to thank these real estate professionals. Now, some of us like to go to the corner store and get some things done, or we like to go to the bootleg auto mechanic. These are real estate professionals, attorney, mortgage broker, realtors. I want you to take full advantage of them. I want to thank them all. I want to thank Brother Andrew Neal, Brother Ferron Daniel, Brother Raj Miraj, and Brother Dennis Key. Let's give them a hand. As they said,
Can I say something?
oh sure,
I want to give a shout out to my cousin Donna that's sitting in the audience.
that's right.
Because her mother indirectly was responsible for me becoming an attorney. I had gone to paralegal school, was living in Atlanta, didn't like it. She said, come back to New York. I went to an interview, found a firm, very powerful firm. As I said, I was doing 2,000 bank closings a year. People couldn't believe that I could do that many closings. I used to do 8 a day, 2 at a time, 40 a week. And if there are 50 weeks in a year, that makes 2,000. And that was 37 years ago, okay?
Yeah,
That's Deli McLaren.
and we just found out, by the way, how all of us are connected to one another. It was weird. I mean, we're just talking over before we started, and all of us have some sort of connection. Everybody knows the connection that Andrew has. His father was the pastor here in the late 60s and early 70s, and Brother Farron, he knows me from my church in Brooklyn and my church that I pastored in Hempstead, and I mean, that's wonderful. And Raj has been an outstanding, he is humorous. He didn't share any of his humor today, but he is humorous, and he has a very good spirit. And Brother Dennis, I mean, that's my man. We've known each other for almost 40 years, so it's just a good thing to have good people. I want you to make sure you take their cards. They know their onion. They know their stuff. So call them when you need them. Matter of fact, hopefully you need them soon, because you need to tell those youngins, tell them that they need to come back to Nassau County, and there will be a way made. You know, they're going to show them how they can come back and realize their dream, whether it's the American dream or not, their dream of home ownership. All right, so let's bow our heads in prayer as we're about to leave. Lord, we thank you for this time together and ask that you would dismiss us from this place, but never from your presence. Take us to our various destinations in safety, rebuke danger seen and unseen, and bring us together again at the appointed hour to worship your name in the beauty of holiness. All of this we pray in Jesus' name, amen. Amen. Thank you so much for coming. God bless you. Have an amazing remainder of your day.